We have an interesting setup, very Nikhil Kamath-like table that we have set up here for this conversation. Very unusual to call someone who's spending billions of dollars on tech financial services while we call a lot of upstarts fintech. So I find that distinction and line blurring too.
The need for feet on street models, physical branches is not going to go away anytime in the foreseeable future.
Some of the compliance measures which are needed, the legacy software stack just doesn't allow it to happen. I don't think a traditional card stack can handle a credit line of UPI. But I think next 5 years to a decade, we don't see a universe where, a lot of the current stack doesn't get replaced in some way or form.
I in fact think regulations will open up opportunities. You look at DPDP right now, I think some tech-first players that are serving banks can really tap into the opportunity, help banks and other regulated entities comply to DPDP really well.
So actually most of our time spent and companies we evaluated last year were non-lending. So across 4 or 5 angles, either it's fintech SaaS or even now AI in fintech, these are themes we are very excited about.
Now we have seen BBPS pull in so many other categories into this level of abstraction of technology that exists there to actually allow loan repayments there, to actually allow credit card bill payments.
Great chat, guys. I wish we can catch up more often together. Good. Hey, everyone. Welcome to this special all-team conversation with the Elevation's Fintech and Financial Services team. We have an interesting setup, very Nikhil Kamath-like table that we have set up here for this conversation. I'm quite excited about this chat because we have all 6 people who've been investing in fintech financial services at Elevation now all together. It's funny because I can't get them all in the same room if I want for a team meeting, but somehow all of them have showed up for the podcast. So this is going to be an interesting chat. Look, I think one of the very interesting vantage points we have at Elevation is the fact that not just that we have invested in India for more than 20 years, but also that we've invested across both financial services and fintech. And I think that's really held us both in good stead. And we genuinely believe both of them present unique set of opportunities, which are really high growth, high return opportunities. But let me just get started now. So maybe start with this whole financial services and fintech as a theme. Maybe Ishwar, I'll kick it off with you, since you are the most talkative member of this group, and ask you on, why do you really think financial services for us at Elevation is relevant and attractive as an opportunity?
I think, financial services has created tremendous value in India over the last few years. Even if you look at the public markets, close to 25% of the market cap is just financial services execution. And even if you look at the landscape in India, right, so you have 60, 70 odd million MSMEs, more than 300 million households. They're still massively underpenetrated when it comes and underserved, right? And the nature of the market is such that even if you look at some of these large banks and large NBFC, they probably cater to the top 5, top 10, top 15% of this market. And vast majority of the market still functions in a way where unless you have a sales officer or an insurance agent who comes to you and says that, hey, this is how you can take a loan, these are the documents that you need, the customer remains untapped. So the need for feet on street models, physical branches is not going to go away anytime in the foreseeable future. And at Elevation, we've invested in these models and have a rich history of investing in these kind of companies over the last 20 years, right from NSE to different institutions in capital markets, different subsectors within lending, like affordable housing, secured, unsecured, gold. So we continue to remain very excited about the space. That being said, it is still very critical for many of these institutions to stay ahead when it comes to the adoption of technology and incorporating all the new age technologies that are coming up. So the line between financial services and fintech is really getting blurred.
So yeah, Vaas, let me bring you in here because you lead a lot of our early stage fintech investing work. So how do you see the line between financial services and fintech, and what do you look at when you look at fintech opportunity set?
Yeah, see, I think to what Ishwar was saying, large population still remains underserved, unserved, right? And it is not a contradiction to say to really serve this audience, you need both high touch models and you need technology. You would somehow think they're contradictions, but I think without these two, there is no universe in which the large audience gets served. So there is a role for fintechs and technology play in financial services to really solve both this access, experience, efficiency problems that we have overall in the Indian financial services ecosystem. Also, see, to this point of blurring, I feel if we look at the narrative about a decade ago, we were almost talking about fintechs versus banks. We talked about, banks were legacy institutions, like fintechs would come in and sort of be only attackers. But I think that model's evolved. I think over time, we've figured out different ways in which both financial institutions, banks, etc., can work with fintechs in different ways, right? One, definitely as technology service providers, as SaaS providers, and we'll talk a little bit about that later in the conversation. But also as distribution partners, very interesting models around LSP, CLM. A lot of those models are evolving. So I think those lines are truly blurring, and I think we need both to truly shine for India to get to its true potential, honestly.
Yeah, no, I also find this distinction quite funny. Honestly, I think the only distinction you could have is to think of yourself as a manufacturer or a distributor or a platform or a regulated entity. To me, financial services and those institutions today are the biggest spenders in tech, and we'll talk about that later on in the chat. And it's very unusual to call someone who's spending billions of dollars on tech financial services, while we call a lot of upstarts fintech. So I find that distinction and line blurring too. On a funny note, the only distinction I find, which a founder told me long back over a dinner, was to say financial services is valued on price to book, but fintechs are priced on price to book. So it's both a PB multiple, but book is hunger. So their hunger is what they get valued on. Awesome. Like on the fintech note, I feel like a lot of this opportunity set is also driven by a lot of innovation that has happened in India on the DPI side. And maybe Ashray, I'll start this with you. You've done a lot of work on DPI. What do you think that lay of the land is today? What do you think are opportunities that presents? And what do you think are some areas for any startup, whether it's traditional financial services or fintech, to both leverage as an opportunity, but also to watch out for?
So I think DPI has now become such a, I would say, ubiquitous thing where we all take it for granted in some context. But I think it's worth just stepping back for a moment to think, and in the context of the entire world, how unique DPI is in India and what the role it plays. I'll just recap a few things just to make sure that we're all on the same page. So I think we started the first wave of DPI with this JAM Trinity, as I think all of us are familiar, right? Like Jandhan, Aadhaar, mobile, right? That first identity foundational layer today across the board covers a vast majority of the population. Like the first Aadhaar layer is 99% of the population. The Jandhan covers like almost 500 million folks right now, and mobiles, of course, is another 700-800 million with high-speed internet and so on. So that foundational layer has been very critical. Over and above this, I think what we went a step further to actually build a payments layer that could leverage this and take it to the next level, where look, UPI is now so commonplace. Like I think we have spoken, or everyone's spoken enough about it, but just to contextualize this, last year in 2024, we did 180 billion transactions on UPI. I think it's worth just pausing for a minute to appreciate the staggering scale at which we have reached on top of public infrastructure here, right? And the second thing on payments that we could do, very interesting, was this Bharat Bill Payment System, BBPS, right? Where we started with simple categories like simplifying utility payments and saying that, look, why should everyone build different infrastructure for it? Having common infrastructure makes a lot of sense to just make transactions simple, remove friction from the whole ecosystem. Now we have seen BBPS pull in so many other categories into this level of abstraction of technology that exists there, to actually allow loan repayments there, to actually allow credit card bill payments, and so many more categories being brought into that system now, where that common infrastructure is powering so many players and allowing more players to offer this. And going a step further, I think what also ends up being super interesting is the data/convenience layer that I call, which actually where we see things like account aggregator, which now almost 80 to 90 million Indians have actually had some exposure to in some form. It's still in its early days, but very, very promising. Things like ONDC, which have actually now done almost like 14 million transactions, something like FASTag, which is actually north of like 4 billion transactions last year. So I think all of these levels have allowed more folks to either integrate these or build business models around this that allow something which was not done as easily earlier to be done much more easily, or allow someone with not as much access to simplify access right now. I think this has been a force multiplier for the growth of both fintech and financial services adoption here. And we have seen so many companies being built around this. So this has actually been a truly fascinating journey.
It is. Funnily, there was a poll we did in the team internally about 7-8 years back. I think NPCI was just starting up, which was the question was like, which is that one company you wish, and if you could, you would invest in amongst the more mature companies. And my answer was, if NPCI was investable, I would invest in NPCI. I think it's just such a fascinating setup we have done. What a wonderful combination of public infrastructure with private drive coming in and setting up.
Actually, the adjective which keeps to mind when you talk about all this is just the audacity of it, right? And to what you said, our tagline of "Built for the Audacious," it just feels
It should be in our portfolio.
we all wish.
Yeah. Look, a lot of this DPI and public utility and democratization of access to data also comes with a lot of accountability and compliance, and regulations clearly been one of the buzzwords, if not forever, it's definitely for last 2 to 3 years for fintechs in India. So maybe Akshaya, start with you and get your view on role of regulations in the world that we live in financial services and fintech, especially for fintechs, and our worldview around regulations and compliance.
Sure. No, I think regulations, if you take a step back, of course, it's been a buzzword for the past couple of quarters. Most fintechs are talking about it, right? But if you take a step back and look at why regulators are doing what they're doing, they're primarily doing this to protect the customer's interest, right? And if you think about it in that way and comply with the spirit of the law, which is what I think most companies should do to build long-term sustainable business models, it does make a lot of sense. All the regulators are just trying to make sure the business models we build are sustainable in the long term, right? And that's what we kind of do here with our portfolio companies as well. The first thing we ask portfolio companies is to onboard a compliance officer. Make sure they are thinking through, do you want to be a regulated entity in the long term? Do you want to be a platform play? If you want to be a regulated entity, go to the right people, get the right licenses, get the right advisors much earlier on in your journey so that you can avoid certain pitfalls. And if you want to be a platform play, you continue to stick to the spirit of the law and remain a platform, right? I think regulations are doing the right thing, and complying to the spirit of them is what most fintech should focus on. I, in fact, think regulations will open up opportunities. They'll not just be impediments, but they will open up opportunities as well. And you look at DPDP right now, I think some tech-first players that are serving banks can really tap into the opportunity, help banks and other regulated entities comply to DPDP really well, right? So I don't think of it purely in an impediment term. I think it can be an opportunity as well.
Ashray, Mridul, I had a question for you. You have seen this, the fintech financial services ecosystem for almost 2 decades now. The one question sometimes founders ask us is, do all these regulations really stifle innovation? And how does innovation and regulation sort of match each other? What's sort of your take on this?
Yeah, look, to me, it's a necessary cost of doing business. There used to be this worldview in the old corporate world that if you run the company in that quote-unquote lala way, you can be very profitable, you're not governed well, you're not audited. So a lot of conventional jokes in the conventional industry in the PE used to be, we invested in a profitable company, now PEs come in, now you put all these governance and, compliances, and now suddenly the company is unprofitable. And I mean, it's a joke, but it's true. Like, there is a cost of high compliance, high governance, high standards, especially when you're dealing with people's money, people's capital, people's trust. And people can think of this as margin shrinking or a cost, but I think this is just the cost of doing the right business, and this is right cost of earning people's trust and building an institution which can last decades for you. Does that stifle innovation? I won't think so. But if you think of innovation as a way to interpret a law and find cheeky interpretations and shortcuts around product innovation, yes, it stifles that kind of innovation, because that's just not the spirit of the law. Having said that, look, even the regulators have been so progressive on creating different kinds of sandboxes, different experimentations being allowed, differentiated licenses being given across any sector you look at, whether it's banking, whether it's payments, whether now we're talking about wealth, AIF, PMSs, solid founders who want to build a business for decades to come will always find a way to innovate. It's not, I mean, we have to understand that we are not running a sprint. I mean, I know speed is overrated and over thought of, especially in, what I call the Bangalore DNA. But I actually think in financial services, speed is not an advantage. It's actually a disadvantage. I actually think first mover advantage in financial services sometimes is not an advantage. You got to let others make mistakes, learn. And I think there's a second mover advantage. So I think if you patiently want to build for years to come, you would flip the switch and think of this as an opportunity to build something which is enduring and something which earns customers' trust over a long period of time.
Very fair.
Yeah. I think it's an interesting debate also on, how do you think of regulation or compliance or different opportunities. I think it also speaks a little to founder archetypes of what we have seen work, what we have not seen work. And Ishwar, maybe I'll start this with you, especially in the kind of businesses you look at, because you spend a lot of time on public markets and traditional financial services for us. And a lot of those are balance sheet heavy businesses. What's been the learning you've had or you think the funders had on, is there a founder archetype and how has that evolved over time?
I think what we've seen over the last decade is the rise of some of the very high quality financial services institutions, right, from large banks, NBFCs. And you have really high quality, very experienced senior operators who've had the experience of building very large books, running massive organizations, right, managing risk. So that wealth of experience is now with us. Right? And a lot of these senior leaders still have the hunger and desire to kind of start something of their own. Right? So that I think is a very, very interesting archetype for us to kind of definitely focus on, because these are people who've built large books and have a wealth of experience. So they've been there, done that, and now are looking to kind of leverage that playbook and do something of their own. So I think that is a type which I think I'm personally very excited about. At the same time, you also have some of these younger people who are kind of hungry to disrupt the market, bring in some innovation in traditional models, but at the same time have some of these old school learnings when it comes to how to manage branches, how to kind of run an organization, large peeps. So I think both of these archetypes are very interesting for us to kind of pursue.
That comes together in even in these models where operators today are building in Fin SaaS or AI in Fin. You need people with the experience of working in banks or selling to banks. At the same time, you need someone in the product DNA who can move fast and innovate on the product, which is relevant for banks to also upgrade. So fair point, it applies on the fintech side of things as well.
Yeah. I mean, this is in no way to offend some of our friends in, Utpal, Anup, Ram that we have funded. But my joke when it comes to balance sheet and risk businesses, and you all have heard it many times, is I like folks with gray hair or no hair. That's decades of experience of running risk and balance sheets. But of course, at the same time, there are a lot of opportunities where if you're building a platform, a new product, really disrupting the status quo of doing things, I think the young and an outsider's mindset helps a lot. Which brings me to the other question, which is, we have often had this joke internally in the team, all roads in India lead to lending. I read this tweet long back somewhere which said, you either die young or you live old enough to become a fintech. And I used to think in India it is you either die young or you live long enough to become a lending company. So, but I think that's that trend has kind of broken down over the last few years. And Kshitij, you spend a lot of time on early stage fintech. You look at, and you've led a lot of deals for us which are non-lending, both fintech, financial services. So maybe some point of view on non-lending opportunities and that landscape in India. And then, maybe Ashray, you can follow that up with what you're seeing on the growth side of our deals.
Yeah, no, you're right, Mridul. So actually, most of our time spent and companies we evaluated last year were non-lending. Even if you look at the market, probably around 80% of funding that has gone into fintech last year has been into companies not in lending. And actually, a few other themes have caught more interest. For example, we also invested in a couple of early stage companies in the wealth side of things. So we did invest in a company called Belong, who's starting with wealth products for NRIs. We also did one company called Z Funds, who was in the agent-led mutual fund distribution business. And of course, like a partnership with companies like Deserve continue to deepen, right? So that is one whole area of like wealth. Beyond that, there are many companies on the stock broking side which have scaled up very well. For example, Grow has grown more than 350 million in revenue now. So that is definitely an example of company in stock broking and wealth. And apart from that, payments as a space has also grown significantly. I would say PhonePe, Paytm, etc. would be north of 800 million in revenue today. And I think the third bucket would be in the insurance side of things, where we saw multiple companies. Maybe Ashray, you can talk about your experience investing in Zopper.
So yeah, I think Mridul, Kshitij, I think fully agree with the theme. Of course, lending is a very attractive area, but I think there's a lot of very interesting opportunities genuinely beyond that as well. And I think across both tailwinds plus the right founders who are approaching those, I think you're seeing a lot of really interesting stuff happen there. And as you, I think, pointed out about insurance, right? I think a very interesting thing, I'll just like to maybe put things in perspective. At this moment, just the gross premiums in the life industry are like north of $100 billion, yeah? And it is a fairly large market that we underestimate in that sense, because maybe it's not a high frequency sort of item for us, maybe not top of mind, but the opportunity is very, very real. And coupled with that, at the same time, I also think beyond government provided insurance, India is still under-penetrated and under-insured on so many levels. And we have the right goal as a country to say that insurance for all by 2047, articulated by the government and the Prime Minister. I think all of these create and both outline the opportunity that exists. And we invested last year in this company called Zopper that actually attacks some pieces of this basically. And we see opportunity, at least in the insurance space, right from enabling the manufacturing side, both on creating new products, plus enablers who can help manufacturers create these products, all the way right to the distribution part, where you're either helping intermediaries sell better, advise better, and making choices simpler for customers and throughout the chain, right? And Zopper attacks and sort of plays on some of these opportunities, which is super interesting. So I think that's one area of interest. And the second, I think, point I want to call out on the beyond lending, what's there beyond lending is actually even in payments, we've talked about these large players who are, I would say, in all of our phones, and we're all used to using them multiple times a day. But there are still pain points, at least on vertical payments, which are still interesting. For example, Skydo comes to mind for me. And they focus on the cross-border payments use case of making it easy for Indian exporters to get paid. And honestly, like credit and so many other pain points exist, but it is still important to realize that core payments itself still has problems worth solving. And there are many such more examples that I think we can do. So I think all of this at least highlights the fact that there's enough and more to be done here. And I think I'm actually quite excited about like what's going to happen here in the next 10 years.
Yeah, so I think we did the bottom line work and we realized, in fact, I read this data somewhere that over the last 12, 18 months, almost half of disbursals in lending have actually been fintechs. So obviously a lot of fintechs have solved what Vaas said earlier, access issue and problem, and a lot of this has been digital first. But if you look at wealth or if you look at insurance, that penetration is single digit percentage. Like, ACO, for example, now, ACO's today scaled, and I keep telling this to Varun, like far beyond what I thought it will in this time frame. I think they've done a stellar job. But today, to Ashray's point, they are playing in a TAM of $30 billion GI, $100 billion LI. And within GI, they have 1% market share. And look, this is just an opportunity to take. So like for us as a team, for founders who are building, I think looking at traditional revenue pools or where revenue pools have existed is obviously relevant. But I think you also have to see where the puck is going and what the trend is. Similarly on wealth, I feel this whole thesis of middle class India and affluent Indians, which are today, let's say above 10, 12 lakh income, give or take, 20, 25 million? We did that math for someone, and that may be like 60, 70 million in 5-7 years. And these are people who are aspirational. These are people who want access to the kind of products that always those HNIs and those wealth managers have had. And this is really at the heart of what Deserve caters to, which is to say, how can I democratize and package the right advisory, the right products? My interests are also aligned with the customers and do that. And a lot of that will happen. I mean, Z Funds, to me, again, it's the same thesis of saying, look, you can move online for a lot of things, but still a large proportion of how you buy and sell will remain offline, even in normal retail. But when it comes to financial services, which requires high trust, high brand, high financial literacy, high advisory, how can you take away the high touch model? And therefore, Z Funds is a perfect example of, fintech making financial services stronger, and such a beautiful marriage of both of that to do that. Similarly, on payments, I feel like we have reached a level playing field when it comes to consumer payments today, because we all have world-class apps like Paytm on our phone, and it's all real time, and UPI has enabled that. But I don't think it's all for business at all. And therefore, one of the theses I feel quite excited about, and we've spoken about it in the teams, is this verticalization. To say, as people get level playing field, as consumers you get experience to world-class payments, as a business owner, how do you get world-class experience? So Skydo is a great example of finding a niche and saying, let me solve cross-border. It's just shocking what rates people pay for cross-border payments today.
But even if you take subsets of consumers, there are still players, right? Like Scapia, for example, caters to the audience who finds travel aspirational, and they've built a credit card product just around that, and a reward system around travel as a focus, which itself, that proposition works very beautifully. FamPay as well is another example in our portfolio, which is just a payments product dedicated to teenagers as an audience, there are like 250 million teenagers in the country today. All of them have the same pain points. So there is a clear play to, and everyone is online, right? Everyone's on their phone. They're way more digital than our generation now. So there's a very clear play to focus and build a brand around payments around that segment. So not just businesses, but even like subsectors.
I'm just happy you said our generation and included me. So thank you for that. I mean, Jodo is the same example, which is like education institutions today, the way they collect payments, the way they think about software, the way they think about payment ops, for example. I mean, if you keep finding these verticals, I think it'll be very exciting. And I think it will only keep deepening. I guess the other question this kind of gets to is to say, look, to build all of these world-class experience, world-class technology, world-class access, as Vaas said, Fintech Financial Services have to partner. And a lot of that needs rethinking of how you think of technology stacks, both for existing traditional players or incumbents and for new players as well. And I know, Vaas, you've done a lot of work along with Kshitij on Fintech SaaS, and you've led a lot of deals for us over the last 12, 18 months in that area. So maybe a little commentary on what that thesis has been at the highest level, and then maybe a few war stories of the kind of themes you have funded and why, and like what excites you about them.
Yeah. No, see, I think if you just pull back and say the why now is very clear, right? If you think about getting software or SaaS into banks or financial institutions, the big struggle has been this inertia to move. Like there are systems and processes which work, why touch them? Like someone said I could get fired for pushing in this software, I will be just okay not picking a software. So I'm better off not picking. So there's been just crazy inertia to move and things have worked. What you need is a force to make that inertia go away. And we think 3-4 forces have now started to come together, right? Like one, of course, just the bar on customer experience has gone up. Customers are demanding better experiences. As some of these financial services institutions partner with fintechs, they are demanding a certain way their stack should work, certain amount of things being on the cloud, real-time, data security, so on and so forth. So there's been that push as well. To the whole thing you were speaking, Akshaya, about regulatory, actually it's been an interesting tailwind for even software, where, some of the compliance measures which are needed, the legacy software stack just doesn't allow it to happen. Like you just need better software. And fourth, like there's been just new things happening. Like there is the sort of volumes UPI does, like a traditional FRM stack cannot handle that UPI volumes. Credit line on UPI, I don't think a traditional card stack can handle a credit line on UPI. So I think all these forces are suddenly coming together, which means, that inertia is starting to move a little bit. Like it's moved a little bit, but I think next 5 years to a decade, we don't see a universe where, lot of the current stack doesn't get replaced in some way or form. which is what makes this overall very exciting. Maybe Kshitij, you should talk through some of the investments we have done and what did we like about them.
Yeah, so I think one example that comes to mind that we did recently last year is this company called Vega Pay, which to Vaas's point, it really fits well into a tailwind of new form factors coming up in credit and how banks can be enabled to really sort of be more competitive in the market and also enable fintech partners to supercharge in some sense, right? So they're building like a very core system within a bank which does credit card management and issuance. So while they have the capability of replacing an existing credit card management stack today, which are many of your legacy companies like Vision Plus and TSYS, but at the same time where it becomes very relevant is that they can power new form factors like a credit line on UPI, which banks are keen to do, and there are like guidelines to enable more of credit form factors through UPI, but they're unable to do, or they're stuck in that inertia Vaas is saying because of tech. So companies like VegaPay can come in and build that new module or offer that new module to banks to really help them start issuing these lines to end customers. Again, it improves, to your earlier point, Ishwar, it improves a lot of reach towards end customers who want credit.
Actually, the funny thing we heard during some customer chats here, issuer chats, was, people said when I want to issue a new card or a new variant, it is not my business team has signed off, my compliance team has signed off, my risk team has signed off. Everybody says we want to do this, but my tech team says this will take a year.
Yeah.
And there is
And those
no way.
change requests and
Exactly. So essentially, if you want to even change, like in your current card system, even if you want to do a little bit of a change to say, I want to make this feature competitive and offer a lower minimum amount balance due for a month, that's a 3-month project with a legacy player. It's literally a services project, which ideally should be like a literal toggle
modular product.
Yeah.
Yeah, and look, if the thesis is that Scapia and Unis of the world have to go and scale and create customer value propositions which are productive, innovative, solves their need, of course in the most compliant manner, then by default VegaPay kind of solutions are what's needed. I mean, that's just...
So the other perspective to that
It's
is
the picks
that,
and shovels to ride.
Yeah, exactly. Yeah.
So like not all banks have successful credit card programs.
That's also true.
And there's a mid tail and long tail of banks who are hungry to run this well. So just starting with a legacy player like a Vision Plus requires upfront investment of almost $5 to $15 million, which is intimidating and significant for any bank to commit to. But you can have like a pay-as-you-go or transaction-led monetization with good quality new age tech stacks like VegaPay. And they are also competitive in the market, and they can have a program running on the credit card side.
And look, this applies to all areas, right, of banking. So I know we haven't announced these deals yet, so I'll keep it very, very fuzzy to say in the broad space of collection tech. I know Kshitij, you and Vaas are leading a deal for us. So maybe talk about what's the pain point there.
So I would actually take a step back. So across 4 or 5 angles, either it's fintech SaaS or even now AI in fintech, like these are themes we are very excited about, and we are doing a couple of investments, one in the collections tech stack as well as one in the compliance tech stack. But there are opportunities across the board. So if you do look at it, maybe I'll go one by one and talk about it, and Vaas you can add. But say even during this whole, like if you're onboarding customers or you're conducting checks on them, the whole KYC AML process requires some automatic checks, but at the same time you have a first layer of defense with manual agents reviewing some of the false positives or actual alerts that come up. So can you make them more productive? Can you almost like a lot of their work is repetitive. It requires you to go online and search for similar things, look at websites, verify something, compile it and analyze it and see if it was a false positive or it's actually a AML risk. But a lot of those things today can be done through an AI bot. And the person who's doing this, their productivity can be 10x, which again towards the end customer, if you are applying for a bank account and you get stopped because of an AML check, and today it will take you 20 days for that to get resolved, because of this AI bot, it can literally be a 2-hour thing where your false positive can easily be dismissed. So that's an interesting area. Another interesting area that we are still looking at, we haven't made any investment, is can you have systems who can, with the ongoing regulations and whatever that's changing in the market today, and especially for companies dealing with multiple regulators or multiple jurisdictions, can I have a continuous stream of that information coming to me? And instead of a consulting team looking at that, reviewing and sending me an email at the morning of every day saying, these are the things that have happened yesterday, please look at this. And a compliance team in my bank reading all of that and digesting it and giving a plan of action to my business team. All of this could just be a compliance bot that does the same thing. And as soon as there's a new marketing collateral needed to be approved, it just flags that these two things might not comply or it needs an additional review. Or it says that, okay, there's a new regulatory change, the kind of onboarding process you're running today, that needs to change in XYZ way. So a lot of that can be real time, and the bot can process large volumes of data and keep updated. So that's an interesting space. So it's actually in the whole compliance AI and SaaS space that those are some themes we find interesting. So that's almost like your second layer of defense, right? Which is a continuously monitored sort of system that keeps running. The second part being the whole collections tech stack. So now for any sort of delayed loans from day 0 to day 180, you can have a bunch of interventions. Here also we are seeing exciting themes like, again, from day 0 to day 30, the way you reach out to your customers, a lot of it again is fairly redundant. So we are seeing new players come up in the market who are offering voice bots to do that calling and reaching out to customers. And then at the same time, what these agents are what your existing agents are talking to your end customers, how they're responding, how effective they are, all of that can also be audited by like a AI bot of sorts, which keeps giving you real-time feedback to the agent or to your business team to say, how well are your agents doing in terms of collections? And the same audit bot can apply to a sales use case as well, to say, how effectively are your insurance agents selling products today, right? So at least those are like two interesting themes we are seeing in fintech, SaaS, and AI. Maybe Vaas, there'll be.
Yeah.
See, this
Vaas
year I
has,
think
Vaas has done PhD in AI in fintech now. So if any founder is building in AI in fintech, he really needs to talk to Vaas.
No,
So-
see, irrespective, this year I think we're going to spend a fair bit of time looking at what AI does for financial services. The way we think about it is today, with where AI agents are, what the latest thinking are on these multi-agent models, see what's happening. Effectively, you're saying your workflows can become more intelligent. Second, you're saying your workflows can become more multimodal. I can look at different voice, images, whatnot. What does that mean? That means suddenly you can move away from being a software to something that is very outcome oriented. You can take a service and you can say, I can deliver this whole service to you with the help of an AI agent, a multi-agent model. Which is the largest services we know of today? Financial services. You go and look inside any financial services institutions today, starting from recon to collections to what you spoke about, compliance to like people doing manual document checks. Like there are literally slivers you can pick and say, can I just think of this end to end and like build the right module to sort of automate this, which is where we think that opportunity set is. At the same time, we think a lot of this will be very vertical. Because I think one, you need deep domain knowledge. To the compliance example Kshitij spoke about, somebody needs to have done compliance in their life before and seen that workflow before they come and say, I'm going to now build an agentic workflow around this. Second, banks and financial institutions have their own unique needs. Like they need explainability, they need data security in a certain way, they need compliance to be happening. Like there's a bunch of reasons why this has to be verticalized, and that opportunity set is very large. So we do think a lot of these very verticalized financial services AI companies will get built. We've invested in one that Kshitij spoke about, and hopefully a few more this year.
Yeah, no, it's fascinating. And I think it's dual advantage. I think it's going to uplift the customer experience radically for you. The example of being real time or much shorter times, and it's going to make you much more efficient. So I actually think the operating leverage AI can provide to the profitability profile of a lot of these institutions is massive, and that's how they should think about it, because it's actually a business. It's not a cost center. It's actually a margin expansion opportunity.
And actually, the good thing that's happening is how fast this is happening. Because, see, imagine when cloud came in, there weren't banks jumping to say, let me go and meet a cloud LMS player or a cloud LOS player or whatnot, right? Like it took its while. Like, in fact, there was a little bit of hesitance to go on cloud or on mobile or a lot of that. But today, when we look at companies, like that first AI meeting is very easy because banks are very actively thinking what can happen. And that realm of possibility is starting to come up in their head. So like, I think it's going to be much faster than some of the other technology waves we saw with mobile or cloud or any of those.
Not just that, Mridul, to your point, like for example, if we take that audit use case again, like you're not just replacing some of the audit teams with an AI bot, but at the same time, you're getting much richer insights through something like this. Like today, manually, you would be able to audit 1% of your calls. Correct. But with an AI bot, theoretically, you can audit 100% of your calls.
Surface area also.
Yeah, and so that gives you a different level of business insights that can feed back into your operations and product. So not just will it improve margins, but it can improve quality of business overall.
Yeah, you can improve your throughput, basically. No, I agree. No, fascinating. I think this is broad breadth of what we have done last 1 year or so, what we're looking at. But I'm keen to know individually from each of you on what areas within fintech or financial services individually excites you. So maybe start this side of the table with Ashray.
Well, I think we've heard it a few times in this chat as well, but I think the most exciting thing for me is the opportunities around building for compliance. Given it is very here and now for a lot of folks, and folks need all the help they can get, building smart products with AI, without AI, solving deep problems there, I think is a big area where I think stuff can happen. I'm feeling quite excited about that.
Sure.
No, I think while lending NBFCs continues to be a area of focus, what I'm currently quite excited about is the whole general insurance space, which you also talked about earlier. So, again, massive TAM, $20 billion, general insurance, $100 billion, life insurance, but still seriously underpenetrated. It's a very complex business to build it well. So that's something that, again, I'm quite excited about.
I think the return of consumer fintechs, I think last 12, 18 months have been quiet for consumer fintechs in general in terms of funding, new companies getting built, some of the older companies trying to figure out the right operating model. But I think a lot of that clarity has emerged. Still enough pain points remain. So there is no reason. And I think this verticalization is also a real opportunity. So I think all that put together, I do think there will be a lot more. And if I think of India a decade out, there should be many more consumer fintechs built in this country.
I think for me, it is to help traditional regulated entities kind of find their fit in this new fintech market, right? So at the end of the day, they have the balance sheet strength, they have the profitability, they have the reach, they have the distribution. So how do you help them become more competitive in this new fintech view of the world where consumers expect better customer service would be something I'm excited about.
I mean, I spoke about it enough, but to add to Ashray, I would say more of AI-led plays either in the compliance stack or your communication stack or general sort of collections and operations stack.
Awesome, decent. I mean, I like all of them, so that's my likability. So, yeah, a good mix of consumer, B2B, traditional. This consumer point, I completely agree with. I think within our portfolio, we know now of so many companies on consumer fintech which are just silently kept on building, and we think are reaching escape velocity now. That to me, that's really an area of focus for us as a team. And just when these narratives start coming, conventional investing wisdom tells me is the time you invest in and lean in. So I think it's a time to really look at consumer fintech, and I hope a lot of founders come with a lot of ideas and don't get discouraged just by funding trends over the last 18-24 months. Awesome. Look, great chat, guys. I wish we can catch up more often together.
We'll need a room like this every time.
I have to catch you all separately in different groups to chat about different stuff. But maybe all it needs is this table and a video shoot. But yeah, I mean, to everyone who's listening to this, look, this is really the core Elevation team which invests in fintech financial services. I might be biased, but I feel probably one of the best teams out there to be your partners across a breadth of areas. I think we have a large breadth that we cover along with the depth of experience we have. So if you're building in any of the areas we spoke about or anything else, please reach out to us.